Hello, everyone. Thanks for joining us. We'll give it a couple of minutes for people to join. Mahmoud, if you can give us a thumbs up when we should go, and we'll jump in. Does it show like the numbers of attendees? Okay.
Yeah, it shows.
Oh, actually, I can't. Okay, cool. Mahmoud, do people usually like join in advance?
Not in advance, but as soon as we press start, people join right away. What's happening?
They're on another webinar.
No, I'm sure something's wrong. I'm sure there's something wrong.
Like with the link or something?
I think we can start.
All right. Hello, everyone. Thank you for joining us today for our crypto webinar. My name is Faisal. I'm a wealth associate here at Sarwa. Accompanying me today is our director of product design and resident crypto expert, Faris. Thank you for joining us. Faris has been involved in crypto for, what is it, 9 years, Faris?
Yeah, like 9 years at this point. So both in investing and working different companies, you know, across the timeline. So a lot of exposure to crypto industry.
Awesome. Awesome. Thanks again, everyone, for joining us. And let's talk crypto. So, today we're going to cover a few fundamentals about crypto, what it is, how blockchain works, the different types of crypto, crypto custody, the value of crypto and the downside of crypto, and some investment guidance on the topic. Before we begin, just a few things to keep in mind. We can't predict the future, right? And our views shouldn't be taken as advice. As with all investments, you should always conduct your own research and understand the underlying asset that you're investing in, especially when it comes to crypto. And of course, crypto is considered highly volatile, especially in the last few weeks. So cryptocurrencies, they get their name because they store information using cryptography, which makes it difficult to counterfeit or even double spend the currency. And as of writing this, the market cap for all cryptos is around $1 trillion. The first crypto and mother of all cryptos, Bitcoin, was launched in 2009, shortly after the 2008 financial crisis. And then Bitcoin quickly became the world's first and largest successful decentralized digital currency. It was created by an anonymous individual by the name of Satoshi Nakamoto. And the first block of Bitcoin contained the message, "The Times, January 3rd, 2009, Chancellor on the brink of second bailout for banks," which analysts believe was included by Satoshi as a direct response and critique to the failings of the traditional financial systems. So cryptocurrencies, including Bitcoin, exist in a digital form and are essentially data entries recorded on a transparent, publicly distributed ledger called a blockchain. And one of the key features of blockchains is that they're decentralized, right? And decentralized simply means that no single entity, company, or government owns and controls the network. In fact, anyone with an internet connection can help run and maintain the network. This is one of the main appeals of using Bitcoin and cryptocurrencies. And it allows people to be in complete control of their own wealth rather than trusting institutions to hold and transfer it for them. Transferring value using Bitcoin or any cryptocurrency is like sending money via email. It's as simple as that. Anyone in the world can participate in the network again, and in what's called the node, right? If you have a computer and you're connected to the internet, you can become a node in the network. So the types of crypto, and generally speaking, cryptos can be segmented into three broad categories, but not all cryptos will fit neatly into these segments. And Faris will touch on this in a bit. But the first category is value cryptos. And most notable here is Bitcoin. Initially, it was intended to be used as a means of exchange, but today it's evolved into a store of value, right? Where it functions more like gold, especially seeing that it has an infinite supply. 21 million Bitcoins can ever be mined, of which 19 million have been mined so far. The second type, infrastructure cryptos, are sort of the second evolution of cryptos. And it was created as an answer to the limitations of Bitcoin early on. And most notable here is Ethereum. It was founded by Vitalik Buterin in 2013. And it's different from value cryptos in that they allow for dApps or decentralized apps to be built on top of it. Faris, can you tell us a bit more about this type of crypto and maybe some use cases?
Yeah, sure. There's a number of other kind of, I guess, competitor layer ones, as they call them in the space, which, basically similar to Ethereum, which basically they allow you to create smart contracts, which are executable agreements based on I have a data input, and basically once that data input's triggered, a certain event happens. So you have other kinds of blockchains like Solana and Cardano and those Avalanche and likes. Some of them are actually up and running, some of them are not. Each have their pros and cons, but without a doubt, Ethereum is by far the most dominant and used blockchain in the space in terms of smart contract deployment at the moment. But there's a lot of intricacies in it. You have other layers that live on top of it for scalability and stuff. But basically, this is where all of the action is happening right now. When you see a lot of your decentralized finance protocols and you see all these different NFT programs and stuff, they all more or less live on a certain blockchain. And Ethereum is one of those in this case.
Cool. The third type, asset-backed cryptos, or also known as quote-unquote stable coins, they're essentially coins that have a link to an object with real economic value, and they're tied to an asset like fiat currency, gold, or even real estate. Most notable here is USDC. So the price of USDC is pegged to the dollar. So for every coin of USDC you have, it equates to X amount of dollars. The real value that these types of coins provide is that, one, they're more liquid than other cryptocurrencies, and two, they're more stable, so to speak. They've come under fire just recently, but coins like USDC and USDT are still valuable stable coins, and they do serve a purpose in this sphere. Faris, I know that they kind of came about because people that wanted to exit or enter their positions within the crypto sphere, but by still staying within the crypto sphere. So this is essentially how stablecoins came about. Can you add a bit?
Yeah,
that?
for sure. So stablecoins are basically it took a lot of time to go and convert between your crypto assets and your dollar accounts and stuff. And in some cases there was long wait times back in the day of like a week to process transactions. I mean, there's many times where I would want to buy a specific crypto at a given date back in like 5-6 years ago. And you literally have to hope and pray that 7 days from then, you're going to get roughly the same deals you're getting then. But if you're going in and out of stable coins, it's a little bit different because, you're converting from your crypto asset to a stable, it's instant. That being said, not all stable coins are created equal. But they're, put it in perspective, Tether represents at the moment like 10% close to 10% of the total crypto market cap, which is pretty crazy, given that just a few years ago it was much closer to like 2-3%. So its popularity has risen, which is why a lot of governments around the world are looking at creating their own government issued digital currencies, because there's a lot of value in it, especially since they live on a blockchain.
Well, 10%, that's quite a substantial amount. But nonetheless, I mean, they do serve a purpose, and they're there for a reason, and that just shows how prevalent they are. Outside of these three buckets, Faris, would you say there are other types or other categories that aren't mentioned?
Yeah, I mean, NFTs is a big one. You also have a lot more kind of niche. I wouldn't say niche, but like they don't fit these specific, in the case of decentralized finance, tokens, they are considered, smart contracts, but they do have their own kind of tokens associated, whether it's, in the case of Uniswap, a governance token, or same with maker tokens, or in the case of other tokens where they actually provide you some, like the Binance BNB token, which they burn and it gives governance, but there's also a portion of, fees, if I'm not mistaken. So there's a lot of different makeups, and they all have different, like the thing about crypto that's very interesting is that they're very hard to define as one particular thing, because like it's programmatic money in a way. So you can, basically define all these different new things. And I'm sure we're going to see many more new types and use cases over the coming years.
Definitely. It's still pretty novel. So there's a lot of room for growth and development. Awesome. So moving on. So there are different types of ownership when it comes to crypto. The main two are cold storage and hot wallets. And cold storage essentially is owning your crypto in the physical world, right? There's a hard drive or USB or some physical object that holds your keys or your crypto wallet. And the second type are hot wallets, which typically correspond to online exchanges. It's a digital wallet, it's connected to the internet. An example of this is Coinbase or Binance. And I would say the main two trade-offs or the main two differences between a cold storage and a hot wallet is one, security, and two, convenience. Cold storage is the utmost secure way to hold your crypto. But it's not as convenient, right? You have to connect your wallet and to access it. So would you say one is better than the other, Faris, for any specific reason?
I mean, in the case of if someone's, their main priority is, top security, then, 100%, cold storage. But, that being said, exchanges do practice, cold storage, such as Coinbase, FTX, Binance. They all make sure that your coins aren't basically just like live on the exchange. However, something to always keep in mind is just, not all exchanges are always created equal. So it's always good to do your own research and make sure that, whatever exchange you are trusting, they do have said security practices in place. Thankfully, Sarwa uses Alpaca, which uses FTX, and FTX is, phenomenal when it comes to security and just in general, how they handle all the different storage mechanisms. So in that regard, when you invest in Sarwa, you are protected, basically to the same level as any FTX customer, which is really great.
Great. Thank you for mentioning that, Faris. We'll touch on how, how Sarwa offers cryptos on platform a little bit later in the presentation, but thank you for that. So crypto has a bad rep, right? It's often associated with illicit activities, scams, and frauds. However, more and more, we're hearing of governments, companies, and even investment firms adopting crypto and including them into their frameworks. Just closer to home, just this year, the UAE announced that they're putting in place some framework to regulate cryptocurrencies. It's an independent authority established under Dubai World Trade Center. So it just goes to show that it's come way beyond its initial origin stories, where you hear it's been used. I think you used this example early on, Faris, where it was first used in that illicit website called the Silk Road.
The Silk Road, I think. Yeah, the Silk Road. Lots of shady stuff went on that site, which is why a lot of people were basically, staying away from it. But that being said, that site was shut down pretty quick. Crypto, it took a number of years for it to shake off that reputation. But to add on what you just said, you even had the U.S. Senate propose, I believe it was the U.S. Senate this week, propose a bill to figure out how to regulate and coordinate these assets. And to be honest, I found it quite bullish, for the outlook of crypto, long term. So there's a lot more embracing going on instead of what was historically seen as banning and fear and stuff, because there's a lot of value in this technology that even governments and stuff and businesses are starting to realize beyond just the crypto rise and fall in prices.
Definitely. But again, like you say, not all cryptos are
not all created equal,
right? So some are more valuable than others, but nonetheless, the whole crypto space is becoming more incorporated and acknowledged worldwide.
Yeah, it's becoming a lot more legitimized, I guess, is the best way of
Thank you. That's a great word. Yes. So this takes us to why are cryptos valuable? What are the pros? The three main values that cryptos offer are: one, universal access. And this has been really highlighted just recently with the current geopolitical situation in Russia and Ukraine. So with the sanctions and with the limitations of the Russians and Ukrainians, crypto was their go-to for moving funds in and out. So this is a great point and a great illustration of how the decentralization is a real value added. As with most of these points, some of the pros are actually cons. So decentralization is definitely a value add, but at the same time, like we'll see in a bit, it can also work against you as an investor. And the third, Faris, if you want to talk about this point, how it technically, or it can be seen as a hedge against inflation. Do you mind explaining why that is?
Yeah, sure. So, I mean, historically, up until I guess a couple of months ago, it was always kind of seen as, crypto always kind of more or less outperforms, inflation, year to year. Not always true, but more or less true. Now, there's been kind of like, I guess like a narrative going on that like, so much for being a hedge against inflation when crypto's going down and inflation's going up. But it's all about kind of perspective, because when essentially the money started to be printed back in, I think, March of 2020, when pandemic was in full effect and governments were rushing to go and respond. If we go look at crypto prices, Bitcoin was sitting at like $3,000. Ethereum was sitting at $80 to $100. pretty much every crypto across the board was sitting at lows. And you go look now and it's like, well, even after all of the substantial, sell-off that we've seen, you're still looking at Bitcoin at like 21,000 and Ethereum at, close to 1,100. And those are multiples above what they were. And it's definitely outperforming inflation on that timeline. It's just, if we kind of just take a snapshot from, a certain point of time from, when basically assets on the whole start to take, a major hit, it's easy to kind of craft a narrative for certain situations. But I think, by the end of the year and, in the years that come by and stuff, I think, it will revert back to the mean as it always does. It's just crypto is extremely volatile. So it's not always going to be at a particular level on a particular day. That's why it's always, best to kind of dollar cost average during these periods.
And the same can be said for stocks even, right? If you look at the current situation now, it looks terrible, right? Everything's taking a tumble. But if you just take a step back and look at the overall trajectory of the stock market, it's outperforming, 5 years, 10 years ago. So it's just a matter of perspective and how you look at it.
Yeah, like Amazon's down close to 40-50%, Apple's down like 30-40%, Google's down 45 to 50%, and then you go to some of the higher, Netflix and stuff, obviously it's down anywhere between, I can't remember, 70 to 90%. So the sell-off is happening in general with respect to the risk assets, but as people kind of look at it as in a, fearish moment, others look at it as opportunity to kind of dollar cost average. So you never are going to essentially always catch the bottom, but building in that, thing, and then kind of, waiting as the years go by will kind of guarantee your position to be longer as a long-term, investor perspective, because people who even bought the top in 2017, where everyone was calling crypto a bubble, they're still okay today. They're still beating inflation. So True. It's all perspective at the moment.
True. And that's a perfect segue into our next topic, and the downsides of crypto. Of course, as with any asset class, but especially here in crypto, that it's highly volatile, right? Case in point, what's happening now, what's been happening for the last few weeks. But again, just as we said, it's all about perspective. If you're looking at it for the last month, then crypto is doing terribly. But if you look at it since its inception, it's doing incredible. But nonetheless, it is highly volatile. It can go up, it can go down 50% the next day. And Fas, you could speak on this. You have personal experience with these swings since you've been in it for the last 9 years.
Yeah. So I mean, you have major, obviously, intraday swings and interweek swings, but you do have, different kinds of cryptos is a much more kind of accelerated market, I would say, in comparison to other traditional markets. So you do encounter different market cycles, and they can be very, very cruel to those who have, weak stomachs, for this kind of stuff, like seeing an 80 to, most assets even now in crypto are down, if I'm not mistaken, anywhere between 70 to 90%, in some cases higher, from their all-time highs. But it's nothing new. This pretty much happens every single cycle. And the thing I think to keep in perspective is that, well, it's down 90%, but where did it start from originally? Where is it now? And then how many times has it kind of gone through this kind of different cycle over and over and over again? Like me personally, you just kind of become desensitized to it all, because it's just, the way in which, these kinds of, markets work with, you don't really have circuit breakers. The markets are 24/7. So you can go to sleep and wake up and it's, a different story, good or bad, which has happened. There was even a time where I got on a plane. It was only a 30-minute plane ride. I landed and my portfolio was worth triple it was before I took off, that's crypto. So like crypto give, crypto takes, is kind of the name of the game. But as long as things have fundamental value and usage, not, to reiterate a point, not all cryptos are created equal. as long as they're, when you're looking into different cryptos, they have, adoption behind it, they actually have fundamental usage, they have, importance to the space, beyond just, whatever marketing and hype points and stuff that's being sold and told. Those cryptos will survive and they will thrive because this ecosystem is growing. From back in the day, crypto was literally, like we said, like used for Silk Road and super sketchy things. And then there was kind of a little bit of involvement where people were saying, oh, maybe we'll use it for payments, with the buying of the pizzas for, I think it was 100 Bitcoins at the time, expensive pizza in hindsight. Each cycle, you kind of see different levels of adoption and different waves of, what people view crypto as, and like whether that's, individuals or institutions and stuff. So that being said, that's why the legality is very fascinating to me, because, the conversation would have even been different 5 years ago than it is today. And most people would have told you you're crazy for saying that governments are going to be creating some of their own, crypto tokens 5 years ago.
For sure.
Today, it's like kind of just, par for course, like it's just expected. So it's fascinating, honestly, to kind of just watch it all play out.
Definitely, and thanks for mentioning that point. Like at this current moment in time, or actually throughout its history, it's occupied this gray space, right? But that's not the case anymore. The US is finding ways to incorporate it. The UAE is. So globally speaking, it's come a long way since its inception, and that's
very long way.
Definitely. And we touched on this second point earlier, the decentralization element, right? Not having one single entity in control of your assets is definitely a pro, but it's also a double-edged sword, right? If anything were to go awry, or you lose access to your keys or your wallet or whatever, there's no one single entity where you can go to for recourse, right? Again, it's a double-edged sword. It can work in your benefit, it can work against you. But you mentioned something about exchanges now having insurances or securities in place that can protect you. But again, that's not the case across the board. So it's really important.
Yeah, this is something very new, like I just recently saw it with Coinbase, to be honest. But in general, like this is kind of it's just a different way of, thinking about a lot of things, where it's like, well, historically people, the reason why people didn't trust exchanges way back was because there was the Mt. Gox hack back in 2013, 2014, where, all the Bitcoin was basically taken from the exchange collapsed, and it was, a done deal. People started to take self-custody very much to heart. They used, the common phrase was not your keys, not your wallet. But we've come a long way since then. Not to say that people shouldn't do it. I think it's just, there's different ways to manage risk, I guess, at this point. And there's different offerings from different, which I think is going to be the case. Like, even like to add to your point about decentralization, like even if you mess up one character when sending it from one person to another, that's it, it's gone. No one can, there's a lot of, Bitcoin that's burned and will never enter circulation again, because it's just gone to a wallet that no one has access to. But at the same time, you go look at, what's being done on Ethereum with like the Ethereum name service stuff, where you can basically say like a website domain, you can say, send my thing to, for example, myname.eth, or, and it just sends it to that, and you don't have to worry about all those. So there's a lot of different, evolution going on, I guess, with, respect to how all of this is going to manage, and how the user experience and stuff will grow and become better. Just like, back in the day when the internet and email and came about, there was a lot of user experience nightmare, situations essentially to deal with. And now we don't really think about these things because it's just so seamless and easy. And I think it's a little unfair sometimes to kind of look at a new space and kind of treat it like it's, comparatively, experience-wise to the something that's been going on for 20, 30 years. But, just seeing from inception to today, it's night and day. It's like a completely different world, as evidenced by how many people have, each cycle just brings in more people and more companies and more, just more excitement and more involvement. So I don't think that's going to change, honestly, as kind of the years go by. So decentralization is good in that people have control over their own assets, but then it's also bad because people have control over their own assets. So like there's good and bad associated with it. Just like, you know, it's like kind of like storing cash under your mattress, you know, like,
yeah,
sure, it's the safest place. Maybe in your view, you have total control over it, but someone breaks in and takes the money out of your mattress. Well,
yeah. And to your point, when you said that, you know, if you just enter the wrong character, you know, that those coins are gone, right? But on the flip side, like if you have those coins in a cold storage, and there's a really famous story about this guy that lost or threw his hard drive in the trash, and now he's scouring landfills trying to find his coins. So there's no way he can recover it except for finding that hard drive in a pile.
One of my friends, he bought Dogecoin alongside me back in 2013, like when we were mining and doing this stuff as a joke. He bought some, and then literally last year he was like scrambling to find, where did he put the wallet? Where could he recover the thing? He downloaded Dogecoin Explorer kind of thing where it lets you, you know, sync up the blocks and stuff. And he waited 2 weeks to have it sync up every block to try and just, you know, see, does he have the money or not in the wallet? Like, imagine. So it turned out he didn't. And he was trying file after file. It was on his old computer that he threw out, which seems to be the common story. People they had it and they just kind of forgot. Thankfully, nowadays it's a lot easier to manage all of this, but back then it was very much stressful. And for him to see him kind of go through it all again was amusing, but then also kind of sad at the same time, because it's like, you know, how far, like you saw the kind of the old way, and now you see the new way, in terms of how much easier it's become to manage these things, like through the ledgers and the Trezors and you know, all those different hardwares, through the software wallets and through the exchange-based kind of. None of that existed back then, so it was pretty much that file was your life.
Wow, that must have stung. I mean, I can't even imagine what your friend was going through.
Yeah, it was rough.
All right, so this takes us into investing in crypto. Now, as with any investment, you should always make sure you cover the basics. And here at Sarwa, we like to preach, before entering an investment, you should always have the basics in check, which include having an emergency reserve for up to 3 to 6 months, just in case. You know, especially given the last couple of years, we've seen the economy shift in such drastic ways and unexpected ways with the pandemic and whatnot. So having emergency reserves is really important. Not having high interest debt accruing on the side is key also when you before beginning your journey. And budgeting, of course, is really important, especially if you wanted to really build long-term wealth. You should really allocate a specific percentage of your monthly income into investments. We like to preach the 50-30-20 rule, wherein 50 is would take care of your needs, 20% of your wants, and then 30% of your wants, and then 20% goes towards investments. And of course, the most important element is manage your expectations. This is true for any investment, but it's especially true when it comes to crypto. As Faris has highlighted, it could be an emotional roller coaster, right? One day you get on a plane and then you get off the plane and you might have 80-70% less or more, but still, you should always know what you're getting into. Another thing we like to advise on is the 80-20 rule, which essentially what the 80-20 rule talks about is 80% of your investment should sit in a passive, diverse portfolio, and 20% is where you can take more of an active approach on your investments. Traditionally speaking, we used to offer allocation to crypto through Sarwa Invest, where you can allocate a 5% allocation to the GBTC, which is a fund that owns Bitcoin. Just recently, just this year, we launched crypto trading on Sarwa Trade. So you can really allocate as much as you want to crypto, but generally speaking, we always advise to to keep it around the 5%. For those that have a higher risk appetite, sure, you can go up a bit more, but just again, approach it with caution. Strategy is really important when it comes to cryptos. Doing your research, reading about the underlying asset and the real world use cases for these cryptos is key. As we've mentioned before, there's a lot of Faris, you said this nicely. Not all cryptos are created equal, right? Some have practical use cases that translate to value. Others, unfortunately, don't. There's a lot of scams and frauds within the space, which is not exclusive to the crypto sphere, but they are prevalent, unfortunately. And of course, diversification, again, as with any asset class, is key. So when we talked about the different types of crypto, it would be a good idea to kind of understand what purpose each coin serves, and then building your portfolio accordingly.
I'd just like to add as well on the strategy part. The other thing to keep in mind is to be wary as well of like crypto YouTube and crypto Twitter on the whole. Not to say that they're bad resources, they can be useful resources, but at the same time, anyone who's trying to predict what something will be by any given point in time in this space, honestly, I've seen it play out way too many times where more often than not, they're wrong. So it's be mindful in terms of, doing your own, really do your own research, double check all the different, facts about whatever cryptos you're interested in, because cryptos do arguably a very good job of creating hype and excitement and stuff, which tends to kind of blind a lot of the fundamentals and the practicality of some aspects of it all. So that being said, crypto is great, as a space, but just like every other space, hype can blind some people. So
thank you for that, Faris. That's a great segue actually to our last slide. And just a note to our listeners, we will be taking questions after a few minutes. So make sure to leave them in the chat or in the Q&A section, and we'll get to them towards the end. So they are definitely, the space is very hype driven, Faris, but can you give us some cautionary tales, other tales that you've heard that people should be wary of, should kind of take note of before entering into a certain coin or the space in general?
Sure, I can talk about two dead coins at this point. BitConnect was a lesson for many back in 2017, 2018. It basically promised future rewards, and so it ultimately was just a Ponzi scheme, like in a literal sense. And when people came to realize the token essentially went to zero within a matter of a week. But more recently, you had your Luna debacle, which many people might have heard of, which basically it was a stable coin that was hyped by a lot of major venture capital firms and major investment firms and crypto YouTube and Twitter as the next kind of big deal. And some people were calling for $300, $400, $500 Luna. Today, I think it's trading at 0.0002 or 1 or something fraction of a cent. If you're in this space, you don't think that something can go down 99.99% a day. It can. But basically, there was a lot of noise that was kind of just there's good reason as to why it failed. But many of the warning signs were kind of actually raised back in January, but people were just ignoring it because greed kind of blinded them. And it was kind of unsustainable what was going on with the Anchor protocol and stuff like that. So that being said, I'm not trying to be overly cynical on the space. Everyone who knows me knows I'm extremely bullish on crypto on the whole. But it's always important to kind of just be mindful as to what you're investing in, because not everything will get adoption and not everything will be used, but there are very good opportunities out there of projects that are, kind of growing and gaining momentum and gaining interest and creating new verticals and stuff within the space that are making a large impact. It's just, you have to do your research in order to find it, which a lot of people tend to skip. So, it's in a bull market, everyone kind of tends to make money just because everything's, tends to go up in a bull market. But, it's usually during these periods where the things that actually have legs tend to stand and the things that don't tend to break. So that's why it's always important to know what you're investing in before, allocating whatever percent of your portfolio to it. And to add, yeah, go for it.
Sorry, go ahead.
I was just going to say that the cult mentality can be very real in crypto. So be mindful of Reddit communities that do not, or, not just Reddit, Twitter, any kind of internet forum medium that basically just, they don't want to hear anything bad about their investment. It's okay to be cynical and critical on something you've invested in, as long as you're aware of it and you're okay with it. It can be dangerous when you kind of just tend to ignore just because it's convenient. But crypto on the whole is a very, very exciting space. I personally, it's what I read pretty much about every single day, every morning and night. So
It's interesting that you say that, though. Even with you being this pro crypto, you still say that you approach these things with a bit of cynicism, which I think should be the case, not just for crypto, but with all assets and all investments, because these scams and these Ponzi schemes are not exclusive to this asset class, right? They happen all over the world in many different forms.
You have different startups, different, venture capital firms investing in, just in most cases, they don't know what they're investing in. It just sounds great, or there's some hype or good, they see, there's some hype around it in, X country or Y country. And then they go say, oh, well, let's jump in before, they don't want to have FOMO, but they do. So they end up kind of, and I mean, it's the same with existing businesses and stocks and whatever, but where there's fundamental value, those things will thrive. Because it's just common sense if you think about it.
I think that the hook, whether it's crypto or any other investment, is the return. Like if you promise someone a return, they see a 10x, 20x, 20%. People are just blindsided. They disregard everything else and just focus on that return, and that's dangerous.
100%. Yeah, and that's why stay away from a lot of crypto YouTube that does that, because a lot of them will say, this thing is going to 10x or 20x by this time, and it's like, maybe it will, but you don't know. Like you don't know, because you don't know what development's going on behind the scenes. You don't know how people will respond, or how people will adopt, or how businesses will adopt, or what level of smart contract adoption will happen. But you could take a step back and say, well, if I'm a long-term investor and I'm thinking big picture, well, you look for certain trends and look for certain kinds of bits and pieces, and you try and position yourself for it through the ups and through the downs. Most of the great investors I know that, who have been in the space as long as I have, alongside me, they've been kind of periodically just purchasing, at different levels throughout, these different dips, to manage their risk, because anyone who's been in the space long enough knows that the bottom is like catching a falling knife. Like it's unrealistic to expect you will get the exact bottom. Most times you'll see people sit there and say, oh, it'll go to this price, and they'll guarantee that it goes to this price, but nothing's for certain. So it's better to kind of take a long-term kind of strategic outlook, and think, well, do I think this space, and do I think these certain technologies, and what are these businesses going to do, or what are these governments going to do, and how are they going to essentially respond to the upcoming smart contract boom, or the upcoming there's new verticals like decentralized insurance that no one it's not really something that's materialized into a big thing yet, but that's like one vertical that I imagine will gain some traction over time. But with that, there's all these different bits and pieces and stuff. So my point is that, with crypto, the long game is always the best game. The short game, some people make money, but they equally lose money because they, try and play the market. And to be honest, the market most of the time plays you when you kind of try and overtime things in the space, because day to day you don't know what can happen. There's the running joke of how many times is China going to ban crypto? So every time it's banned, you see like a down day that day, but it's like, well, it was banned already. Like nothing has fundamentally changed. But
it's been 13 times, no?
Yeah, I don't know. It's anywhere between 13 and 18 at this point.
Wow.
So yeah, there's a great website as well. That's bitcoinobituaries.com, where it lists all the different articles over the years since its inception. And it's still, to this day, it's updated with, this is the death of Bitcoin. This is the death of Bitcoin. I think now it's hundreds of articles long. Like you just see them kind of just pile, because, every year people say this is the death of Bitcoin this year. This is the death of X crypto and so on. So yeah, it's very much like there's always going to be cynics in the space. There's always going to be people, and that's natural. That's healthy.
Yeah.
But that being said, if you do your research and you do have a strong opinion and conviction as to where something will go, then the long game is always the best game in crypto. That's majority of the people I know that like me that have had their assets in crypto for a long time. That's how we kind of view it, because you've lived through all the ups and downs and all through the negativity. So yeah, crypto's special, and it's the same, like you said, for other investment spaces too.
Definitely, and the same goes for timing the market, right? It never works in any market, but it's especially true within the crypto world. But again, it's not a strategy that will serve you. It'll most likely work against you.
Yeah, there's people last year screaming Bitcoin to 300,000 by end of 2021, and those same people now are tweeting Bitcoin to 3K by and it's like you don't know. Like you got it wrong before, you're gonna get it wrong again. It's better to take a more smart approach to thinking about what your allocations you want to be to manage your risk over these coming years and months, and because crypto is very much, there's short-term benefits, but there's a lot of long-term kind of signals to indicate that it's going to grow as a space. It's not going anywhere.
For sure. It's definitely in its infancy. All right. So main takeaways is we kind of talked about crypto, the underlying technology, how it works, the different types and the different storage methods, where it's come today and the traction it's gained, and some investment guidance on how to approach it. That's our presentation for today. We'll open up for questions. So again, if you have any questions, please feel free to type them in the chat or leave them in the Q&A box, and we will get to it. While we wait for some questions, Faris, here's one. So we said that you should always approach these things with caution, do your research. How would you advise investors? How should they do the research? I mean, do you think they should literally download the white papers and read through it line for line, or is that too excessive?
That's literally, so like it's funny you say that, because that's literally what I did. When there was the bear market back in the start of the bear market back in 2018, I downloaded literally every project's white paper, and I just sat there going through them one by one. I was sleeping like 4 hours a night. Like I took a month off from work to do it. Basically just going through, I was on a mission to basically say, like, where do I think the space is going to go, and what do I think is basically a scam, and what I think isn't. And it was really insightful. Now, that being said, I have like a background in, programming, and I have a background in these, so it's not entirely the same. But that was as good as it got at the time, in terms of, nowadays, I would say, like, following not necessarily just what a project is saying and not what the communities are saying. Just, trying to just find out as much information as possible that is not talking about price predictions, that is not talking about, because those tend to have certain motivations kind of associated with it. Thinking, more so around like, just in general, kind of what you kind of envision, the world to be, or the world needs to kind of get there, is probably the most key thing. There was a lot of projects back in 2017 that are just not around today because they were just, they just sounded great on paper, but like it's like buzz and marketing and hype, but like not very practical. In practice, they didn't need a token. It didn't make sense to have a token. But they had it anyways, and people kind of bought into it, and because of the hype and the hysteria, and everything was going up during that time. So it's, you can't lose. It was all hopes and dreams, and so yeah. That's why I always say, like, it's good to have some healthy skepticism. Every single person around me that has been in crypto for the past 8-9 years, we all have a sense of skepticism, even though like we've worked on all we know the limitations of, Ethereum blockchain. We know the limitations of, how smart contracts can be inherently stupid to start. And, when I was working on, a decentralized credit protocol, we knew that there were limitations to, managing different data sets. Now the landscape has changed. There's different ways to manage these kinds of bits and pieces, but that's what I'm talking about in terms of the evolution of the space and how it's growing in terms of the pieces and infrastructure and the piping, essentially, that's like being laid down so that, these projects and these spaces can like flourish and start to exist. So it's when it comes to doing your own research, it's just, looking at all different aspects, because there's a lot more now available today than there was then. To say the least.
Just to give context about this, how technical are these documents? I'm sure it's not an easy read, but is there enough information there where you can discern whether this is has real world application or not?
Yeah, like I'm going to be honest with you. I'm not going to say that they're the most exciting things to read in the world. Some of them do read like scientific papers in a way.
Yeah.
But they do have a lot of information, like, with respect to how their token economics will work and how they theoretically propose they'll work. Now, that's the other thing, is that there's a lot of theoretical, but then there's a lot of changes when you get to the practical and the implementation of it all.
Right.
Because you don't know necessarily how things will play out until you get there. So it's very, very, useful in that regard to kind of like, not like we just said, not all projects are created equal. Not all white papers are created equally. I've seen 6-page white papers and I've seen 100-page white papers. Like it just depends on the project. And just not to say that the 100-page is better for what it's worth. In some cases, they're actually worse because they try and fill, and some project copy pasted white papers from other projects, and there's plagiarism that happens in the space. So so a lot of projects, even, like, not to say that they're bad projects, they're actually great projects, but they start off as clones of an existing project, and they literally just copy paste the code and then create something new using that same code. Completely different experience, different purpose, different goal, but both are successful, both are big, so it's fascinating to kind of see that it's research is just done in a variety of different ways at this point. But Twitter can be a good resource. YouTube can be a good resource when educational. And of course the white papers and the project blogs, when they're talking about different updates and progress that they're trying to make and stuff. So
awesome. Thanks for that, Faris. We have a question here from Ali Janahi. You're asking, Ali, where to download the app. So you can find us on Apple Store or the Google Play Store, or if you type in sarwa.co. And just to reiterate, we have Sarwa Invest and Sarwa Trade. You can buy crypto on Sarwa Trade. At the moment, we have 4 cryptocurrencies. Bitcoin, Litecoin, Ethereum, and Bitcoin Cash. And then on Sarwa Invest, you can allocate 5% to GBTC, which is the Grayscale Bitcoin Trust. And that's it. That's 5% allocation to Bitcoin on Invest.
Just a note on the Grayscale Bitcoin Trust stuff. There's actually something exciting potentially happening in 2 weeks for it. They have an SEC, I don't know if it's a hearing or ruling, to determine if they'll be able to offer GBTC as an ETF.
Yeah.
It's very exciting because that hasn't been done yet for a crypto, asset, which would basically would make it so that they're not traded at discounts, or they're not traded at, it's not periodical. They get to do it in basically real time. I mean, I'm sure you know.
It would lower the fees essentially for investors, which is awesome.
Exactly.
I know that it would be the first time in the US for this to happen, but I read recently that it happened in Australia.
Yes.
Okay. That was the first ETF. Awesome. Okay.
Yeah.
Awesome.
Yeah. I guess I should have said more so for because the US stock market is just see it as like the largest market right now, whatever. So it's like they're embracing it. It's a big deal. But yeah, it's awesome to see Australia. And I can't remember, there was another country that did it as well recently. So it's a nice trend to see, because right now they can only update the price every so often. Not the price, but the whole structure of it all.
All right, Ali, I hope that answers your question. If you had a follow-up, please reach out. We would be happy to take it up. If anyone else wants to ask a question or leave a comment in the chat or the Q&A box, we should be wrapping up at 7. So if you have any pending questions, please feel free to share them. I think we have, it's another question. Oh, actually we do. How is it different? So Vijaya is asking, how is it different from Binance for crypto trading? I'm assuming she's referring to Sarwa Trade.
Yeah, so the nice thing about Sarwa is that you get to kind of basically manage not only your crypto assets, but stock assets, as well as have a passive income, portfolio through Sarwa Invest, all in one package. Whereas Binance, the onus is a lot more on you to kind of manage your assets, pull them in, pull them out. And it's pretty much predominantly crypto. So the nice thing about, Sarwa Trade is you can literally just go between stocks and crypto if that's, something that interests you. It's very unique because there's only a handful of platforms in the world that allow you to do both at the moment. It's really awesome to see. But yeah, I've historically been a user of Binance in the past. No, it's the same app. You can use the same app.
It is. So at the bottom, you'll see a tab for invest and a tab for trade. So everything we've discussed, the coins we mentioned will all be there under trade. So as Faris said, you'll see the cryptocurrencies, stocks, ETFs, all under one app.
Yeah, we hope
Suleiman.
Time.
Yeah, Suleiman, we'll be sending you the recording. If you wanted to ask a question while you're here, we'll try to answer it 4 times up.
Yeah, just to make you laugh, I have literally TradingView open on the side next to me.
I can imagine.
It's just part of this. This is part of it, Can't
it is. It's almost like a reflex, I'm sure. At this point.
Literally, it's the first thing in the morning. It's like I won't check my messages. I won't check whatever. It's just okay. Let's see TradingView. Even if I don't care, I don't plan to sell anytime soon. But it's just let's see what happened overnight. How bad or good did it get?
I know the feeling very well. Well, thank you everyone for joining. Thank you, Faris, for joining us in this session. We will be sending the recording as mentioned. Again, thank you all for joining us. If you have any pending questions or that comes up, you can always reach us on our socials, email, or even call us. We'll always be happy to help you at any given time.
Thank you, everyone.
Thanks again, Faris. Have a great day.